everybody, and welcome to the Technical Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As always, keep in mind that risk is involved with any trades that you make. I think we all understand that. So you want to manage risk in a way that makes sense for you. And there are some tools built into our web trader and the AvaTrade app that help make risk management quite a bit easier. So if we come across those tools within the session, I'll point those out for calculating exposure and protecting in unique ways, like with AvaProtect and other nice features. So we'll point those out as we come to them. Now, also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can access the web trader, which allows you to trade on both MT4 and MT5 accounts, but with the advanced functionalities such as signals, advanced economic calendar, market buzz, etc. And we'll go over some of those features within today's session. Now, if you tend to trade on the go rather than from one place, then you're probably trading via mobile. And our AvaTrade app, as I alluded to a bit ago, has the same functionalities and features, so you can also have those trading tools within our mobile app with the features like AvaProtect and the signals, etc. Now, if we log in the upper right-hand corner here, then we'll be in the web trader platform. Now, I know today's a technical analysis session, but we should always consider the fundamentals as well as we're going along. So some things to consider today, and there's actually quite a bit to consider from a fundamental perspective before getting into your technical analysis. One, which we've known for a while, is scheduled on the economic calendar, and there's the FOMC rate decision and statement are coming out just in a couple hours time out of the US. And so it's expected the US is going to lower interest rate by probably 0.25%. That's the expectation. They could surprise and either hold the rate the same or lower it by a larger amount, maybe 0.5 percentage point. We don't know for sure, but usually the prediction is most of the time what they end up doing. We'll see if that's the case this time, but likely they'll lower the interest rate 0.25%. And so, that maybe is built in to the movements already, since that's the expectation. So if there's anything different than that, you'd probably see larger volatility, larger movements on different instruments. But we have to understand that that's upcoming this evening, and you can expect a lot of volatility around the rate decision and also the statement that follows. Now, the second big thing that's occurring, and this is more recent, there's been some escalation in the Middle East between Israel and Hezbollah, which is out of the north of Israel into Lebanon. There seems to be escalation with devices that exploded, things going on that maybe could lead to a larger scale war situation. And so I think there's some tensions maybe hitting the markets already with regard to this. And so this is something else to keep in mind as we look at the technical analysis that's going on. So if we think about things such as gold, which are safe havens, maybe the Japanese yen, some other safe havens, such as the currency safe havens, Swiss franc, yen, and even the US dollar, those also could react to a fear situation. And so if we pull up gold, first of all, we can see that there is a signal. We can take a look at the technical signal, and from a technical perspective, it's a sell signal. But we have to understand that the fundamentals now could be either working with that or working against that. If indeed there's a rate cut this evening, which is expected, and then that's followed by a press conference that talks let's say, aggressive about more rate cuts, that could weaken the US dollar, allowing gold maybe to more easily climb. If they talk the opposite, that we're lowering the interest rate now, but we'll be careful about further rate cuts, that could serve to strengthen the US dollar. Because everyone expects that 0.25% rate cut, or many people do, I shouldn't say everyone. And so I don't think the rate cut itself will be, if it indeed it's 0.25%, will be something that would cause the strength of the US dollar, at least in a long-term sense, to go up or down, because the movements are kind of built into that expectation already, the movements that already occurred. Certainly there will be volatility as the announcements coming out, but what tends to move the market then a little more long-term is what they say in the press conference about future policy. And you don't know for sure what Jerome Powell or any others that get messages out this evening, what for sure they'll have to say. You can try and anticipate it and make some preemptive trades, but we don't know for sure what they'll say. Now, there have been ideas alluded to up to this point in terms of monetary policy, of what many think they will say is going to happen, with the 0.25% rate cut this evening expected, and maybe talk about a 0.5% cut with the next rate decision before the end of the year. But we'll see if that's what they actually allude to with the press conference or not. Okay, so why is gold a sell signal now? You can see on the chart there was a resistance level up here that it reached and was dropping down from. The technicals say that maybe it'll drop to 25.61, even as low as 25.54. Okay, and we can see that on the chart here. Okay, if I want to expand this chart up, I can look on gold here and see there indeed is resistance up here. Okay, resistance, 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 and here's the dropping, starting a bit of a downtrend here. Okay, so we can see the downtrend off of the resistance. The technicals are there for a sell, a nice convenient rise up here before pushing down again. So if you wanted to go with the sell signal, it's kind of an opportunistic spot to sell from, because it's a downtrend just below a nice resistance level. And I see a major support level down here around 25.26. Okay, you see this was resistance, resistance. Here's a breakthrough candle and up it went. And so if this is going to come down, this is the first area in the signal for a short-term trade. Right in this area, this is the support level that they're saying here you might take profit on. Okay, 25.61, and that's the first spot they say maybe take profit on this sell signal. Okay, that's here. So you can see why at 25.61 the signal would say maybe you take profit. You see this was a support level not that long ago on the 4-hour candles. Okay, just going into yesterday, we see support here, and into today, support. Okay, so if you're selling, short-term move, they're saying take profit 25.61. Okay, from a technical perspective, I completely agree with this signal. It looks like a downtrend. It looks like it came off a resistance level. It looks like it's on its way to try and reach this support level here, which is where they're saying to start taking profit in the signal. And then their next spot is just down a bit further, 25.54, which is the next little support level down. Okay, that's here. That's where there was resistance. It had trouble going above and then bounced up a little further. So in this area, they think support will be found, at least temporarily. And that's why the sell signal says take profit in this zone. If you were looking for a longer term drop, this is the next support level down. Okay, so depending on how the rate decision goes and how the press conference goes afterwards, if it breaks this support area here, you could see maybe gold push down towards 25.29. So all this downtrend talk with this signal, it looks good. If only there weren't other things happening fundamentally that maybe could work against this signal. Okay, so if the talk in the FOMC statement is more dovish, if it's weaker talk about rate cuts moving forward, then the opposite could happen, right? The movements could go different than if they talk bullish about future rate cuts. Okay, so if they say, yeah, we were going to be aggressive with more rate cuts, you could see gold go up with the US dollar weakening. If they talk the opposite, you could see gold strengthen and break the support level. Okay, so this signal, I'm not so hot on because of the current situation. Okay, fundamentally. But it does look like a nice technical signal if we were in the middle of the day without major announcements coming. Okay, I think I'd take a wait and see on this. And what would be my technical plan? Pending order. If it breaks this support zone, pending order to sell if it hits down here with a take profit just before the support level here, because it would have established good momentum of breaking all of this support area if it hits an entry price down here. And then the next support level is not until here. And your stop loss could then just be back above the broken support. Okay, that's one idea I have, is surround this zone with a pending order to sell if it breaks all of the support, and the opposite, if it breaks above this resistance here, above 25.88, let's say 25.90-ish. Here, let me just drag the chart down a bit. Okay, if it breaks this area, a buy to go to new all-time highs. Okay, so right now I see it ranging between the support and resistance. I don't trust that it has to drop any further or rise immediately because we're waiting to see what's going to happen with the FOMC. And don't forget about the escalating war tensions in the Middle East. Both of those situations are very powerful in terms of being able to cause large movements and movements that could last a while on the charts. Okay, so I feel like I'll forego the short-term move between this range and wait to see what the big news does as to whether it breaks to a new all-time high, which then I have a pending order to buy with my stop loss just below and my take profit up at a nice round number, and also a pending order below. If it breaks the support, then the big news must have strengthened the US dollar, not weakened it. Okay, so I might set this up just prior to the FOMC statement so that it doesn't get triggered before it. And so pending orders with what we call breakout strategy might make sense right now. Why? Because it's really big news. If it's smaller news, then trading on the range between this resistance and this support would make sense. If there was little to no news coming, no problem. I'm on this sell signal taking profit at the support down here, like the signal says. But this is a technical signal that's not necessarily taking into account the huge fundamental news, both scheduled and unscheduled, that's going on right now. Okay, combination of huge economic news and also possible escalation of war in the Middle East. Okay, so this situation, I think, calls for waiting to see if there's big enough news to cause a big breakout. And if it breaks out to all-time highs, you might ride the momentum up, pending order up here. And if it breaks through the support levels, you might ride the momentum down. Maybe it retraces then this breakout candle to the next support level down if it breaks out that way. So two pending orders on either side of the support and resistance, waiting to see what the breakout move might be. And I can simulate that very easily. Okay, so what we can do is say, execute when price hits. I'm on buy right now. So execute when price hits. It should say if price hits, right? Not when. There's no certainty that it will hit. But if the price hits, I'm going to say 25.92. That would be a new all-time high. If it hits 25.92, then something big must have happened to spur a buy into gold to break to a new all-time high. And we know there's really big news happening now and soon. Okay, so breakout strategies are good if you expect large sustained movements to occur. Okay, if you don't expect large sustained movements, if you don't think the news is big enough, then you don't do this strategy, obviously. But this is a simulation of a strategy you would use if you expect the news to be big enough to break through either the resistance or the support as that news comes, and then carry on with momentum potentially. So take profit. Could be 26.50. Okay, entry 25.92. $25.92. Okay, so that gets us above the current all-time high, $25.92. That would certainly be a breakout upward. Would take some momentum to do that. Then we'd be looking for a little over $50, $58 to be exact, before it would hit the take profit. Stop loss then, if it breaks through. If it has momentum, hopefully it doesn't look back and it triggers your buy pending order. If it does pull back, where's the safe spot to have your stop loss? You want it back far enough that if it is going to pull back, that it doesn't hit it and then go up. You're hoping if it breaks through and pulls back, it's just a small pullback and then continues up. If your stop loss gets hit, obviously that's in anticipation that then it was a false breakthrough and you get out in case it keeps pulling downward then. So stop loss, you want far enough away not to be a false hit, that if it gets hit, you're convinced that it was going to reverse and come back down. So this is the all-time high up here. If it pulls back and breaks back below this resistance, where it hit and came down here, if it breaks below 25.78, then I'd be convinced, hey, maybe this is going to keep dropping then. So maybe 25.75 is a spot. It might make sense for my stop loss. And each trader, you can see the candle's a little different, but I'm trying to make it so if it breaks through and triggers my buy here, if it then pulls back a bit, I'll give it a chance to continue to climb. I'm not putting my stop loss just back below the one resistance. It would have to break back below this, what should be support at that time if it breaks up, and then it would have to come down and break below this support in order to hit my stop loss at 25.75. Okay, and you see my potential profit is about not quite 4 times, 3.5 times or so what I'm risking. So I can even put my stop loss down at say 25.70 so that I'm more sure that it's a true reversal and I'm not giving up on my trade too early. And so it's about 3 to 1, a little less than that potential profit to risk. Okay, now that I have my plan set up of where my take profit and stop loss would be on the buy situation, 25.70, that's right about here. Okay, this is my stop loss. My take profit is up this direction at 26.50. So I would need to go a little higher on the chart. 26.50 is up here. Okay, there's my take profit. There's no resistance here because it's all-time high territory. And my stop loss is down this way, 25.70, if it triggers this buy. Okay, and at some point, if it moves up, you could move your stop loss up to entry or somewhere into profit if you get a movement and you're afraid it won't reach or take profit before pulling back. Okay, or you can do a partial close as well. Now, what I would do now that I have my technical set up for the buy scenario, I'm going to adjust my trade size because I don't want to risk 7,700 on this balance. That would be more than 10% of my balance. So I probably want to risk something more like 620, which is 1% of my balance, or maybe 2%, something like that. It depends on each trader. How much do you want to risk? 0.5% even. Everyone's different with their risk tolerance, but now I adjust my trade size for the amount of risk I'm comfortable with. So if I go to a trade size of 0.25, a quarter of a lot, now I'm risking less than 1% to go after almost 3% profit. Okay, so 0.28. Okay, now I'm risking almost exactly 1% of my balance. Okay, 616 risk to go after over 1,600 profit. Okay, and again, that's a pending order. Execute when price hits. Okay, it has to go up to 26 or 25.92 to trigger, and the take profit then's at 26.50. Stop loss back down at 25.70, which is $22 below my entry price. Okay, so you'll see over here now that this trade is what's called an order. It's under the orders section. Here's the trigger price, 25.92. That's the price that the trade will open if it hits that price. Okay, and so now I can go back. Let's bring up gold again. Sorry, by switching sections, it defaulted back to another instrument. So let's bring up gold again. And now let's do the sell scenario. Since this is a technical strategy, a breakout strategy, then we've done the buy, okay, if it goes up here. And now if it breaks this support level here, and remember the technical signal had a second support here. So if it breaks both of these from the sell signal, then it looks like from this spot, it could free fall down to the next support level down here. Okay, and you could look further than that. We could look at the next support down this direction. You see this was a support level back here where it hit once, twice, 3 times, 4 times, and then went up. Okay, so it depends what kind of distance. And that's a nice round number around 2,500. If this was a strong downtrend, it might head towards 2,500. So just above that 2,502, somewhere like that could make sense for a longer term drop move. If you feel like the policy of the FOMC statement tonight breaks this support and you think it's a true downtrend, maybe you're looking for a drop more like to 2,500, because this would be kind of a long-term monetary policy that they're going to talk about this evening. And so if it's enough momentum to convince you to sell, then maybe you're looking at more than just $10 or $20 movement. You're looking maybe a bit further down. Okay, so execute when price hits on the sell. Take profit, we're saying down around 25. So let's say 25.03, 25.04, just above that support level. Okay, execute when price hits. Again, it should be if price hits, but we understand that it may or may not hit the entry price. If it does, then it opens. Take profit. I'm sorry, I need to put the execute when price hits. 25.52, it needs to break below. So let's say 25.49. If it hits 25.49, it cleared all of this support here. Okay, so 25.49 for the execute when price hits. This is where I want to put the 25.03, 25.04 for the take profit. Don't mix up your entry price with your take profit, which I think I just did. So stop loss then. If I'm entering at 25.49, then my stop loss could be back above these 2 support levels. Because if it's a true breakthrough and real momentum, it might bounce back up some and then go down. But if it breaks back above both broken supports, then maybe it was a false breakthrough. So your stop loss being somewhere back up above all of these broken support levels, if it triggers the sell down here, stop loss back above these might make sense. Like 25.62, 25.63, something like that. It would have to be a significant reversal back up to trigger the stop loss for you to give up on the sell. So small volatility, you'd still be with the trade. And you see it's still like better than 3-to-1 ratio. So I can even be a little safer on my stop loss, move it further away. Maybe I want it to go to 25.66, something like that. Okay, and still better than 2-to-1, almost 3-to-1 ratio here. If it goes to the take profit, I'm making over 15,000, risking less than 6,000 with this setup. Okay, so technical setup is entry. Let me pull some of these lines down. Entry here, okay, just below these support levels. If it has enough momentum with today's announcements and events to break all of this support, then you're selling if it hits here with the downtrend. Stop loss back up above these, up here at 25.66. So it would have to come clear back up to this spot to give up on the sell. Once it triggers the sell here, it would have to go above here, and hit this line here to give up on the sell. Okay, so if it breaks through and spikes around like this before dropping further, you're still with it. Okay, and your take profit then's down here above the support at 25.04. Okay, right in this range down here. So nice distance to take profit, less distance to stop loss. The price levels are in your favor to act as resistance for this to try and go back up if it triggers the sell, and no resistance, or I should say no support in the way before your take profit on the way down. So a nice technical breakout strategy. I just need to adjust my trade size now so that my risk management is proper. So I need about 1/10 of the current trade size. So 0.35 is going to give me a risk of just under 600, less than 1% on my account. Okay, I could go a little bigger, 0.36, and now I'm risking closer to 1%, just a hair under 1% to make over 2.5%, somewhere near 3% gain on the account. Okay, 2.5%, something like that. If I'm comfortable with the risk management and the technical setup for this pending order sell, okay, just double check. My execution price, 25.49. Stop loss, take profit is lower, right? It's a sell, 25.04, $45 down. And my stop loss is higher, 25.66, above my entry price on the sell. So everything makes sense. And now I've got a breakout strategy set with 2 pending orders. Now, what we are guaranteed of with this setup is you will enter the market. We don't know when, probably sometime soon. You will enter the market with these 2 pending orders sitting, because eventually it has to go up or down. Okay, it has to either break to a new all-time high or break the support and drop. Why use this strategy now? Again, in case anyone joined us late, because there's huge news occurring right now with escalation in the Middle East, with potential war escalation, and coming soon in a couple hours time, big news on the economic side out of the US with the FOMC statement, rate decision, etc. So we could probably expect a safe haven like gold to have some large and potentially sustained, is the word I'm looking for, I almost said suspended, sustained movement in one direction or the other. Could potentially happen. Okay, so when you're working a technical strategy, and that's my point right now, not so much that you have to agree with this strategy right now, but when you're working a technical strategy, you should try and combine the current fundamental news with which strategy makes the most sense. Like right now, I don't think the ranging strategy makes sense to trade down from the resistance and up from the support between those high and low prices to expect it to keep reversing up and down. Right now, I think a breakout strategy might make more sense because the news is really huge. Okay, so there are different technical strategies you can use, thinking when it goes up, it has to come back down, and when it goes down, it has to go back up. That's on a day maybe without big news. On a day with big news, you might use a different technical strategy. So how successful a breakout strategy is, like we went over, or how successful a ranging strategy might be on a different day, it depends on what's going on with the fundamentals as well, because the technicals are driven by the fundamentals much of the time. Okay, and that's the point I'm trying to make, more than just saying you should do the breakout strategy now. Just I'm hitting home the point that which technical strategy you choose should be in alignment in your own brain with what the fundamentals are, with what you think would increase the chances of a different strategy or the current strategy working or not. Okay, I'll pause for a moment. Any questions on what we went over with this gold breakout strategy? And I'll bring the chart back up with all of our lines. And just to simplify things, I'll make one line here. If this breaks down to this price, we're selling with the strategy I just went over. If this goes up to this price up here, then the strategy is buying. It's that simple. The price is right in the middle of a range where there was support, resistance, okay? And so it's right in the middle of these two prices. And so if this goes up, breaks the all-time high and hits here, it's a buy. If this goes down, breaks all the support and hits this price, it's a sell, okay? Take profit here if it drops, take profit up this way at 26.50 if it goes up, okay? Obviously, you can modify. You might, for example, you might like this strategy idea, but not the exact entry prices and exit prices. So you can agree with the strategy concept, but modify exactly where you would enter in both directions, how far you'd have to take profit. I based my take profits on the technical analysis of where's the next support level if it does downtrend. Where's the next resistance level up if it does break through and go up, which again, there are none, because this would be all-time high territory. So there's no resistance. So I just picked a round number, 2650. Okay, if it breaks above 2600, maybe it's on its way to 2650 in the coming days or weeks. Okay, depending on how big the news is this evening, right? We will see. And the good thing about this strategy is if the news doesn't surprise anyone, if things calm down in the Middle East, then maybe it doesn't trigger either trade. Maybe it just goes sideways a while. And I know I said you're guaranteed to enter on one of them at some point, but you can cancel these trades before they trigger. If you think, hey, the news wasn't big enough, then you can just cancel the pending orders later tonight or tomorrow morning if they haven't triggered yet. Okay, and that makes sense, because if the news wasn't big enough to break one of these price levels up or down within a few hours of the news coming out, then maybe you decide, okay, different strategy then. Let me do a ranging strategy where it's going up and down more. Okay, so as the news evolves and changes, then so too can your idea of which strategy is best. Okay. All right, so that's the main point I wanted to hit home this evening. We can use that strategy on any instrument that you think could move related to the current news. So certainly the euro US dollar comes to mind. Why? Because we're talking about the US FOMC committee and US rate decision. Okay, so we can take a look at the 4-hour candle, something like that, on something like the euro USD. I can do the same strategy, resistance here, support down here, okay? And here's my range. Resistance up here, support down here, okay? Resistance, reverses and drops, support goes up. Resistance, reverses and drops, support goes up, okay? So it's ranging between these two price levels, up and down, up and down. So just like we did with gold, if you like the idea of a breakout strategy when you know there's really big news, then you can have a buy above the resistance, pending order, sell below the support, pending order. What about the US 500, Dow Jones, etc., NASDAQ? We can look again at ranges. Here's the 1 hour candles. Okay, this is just in the past couple days, a range that developed. So what I see here, I see resistance. Maybe I would go with this one. Okay, this is a support, support, support. See here, this is a breakthrough candle. Again, breakthrough candles are larger, more powerful candles. And then it became resistance, resistance, resistance. Okay, so what was support? Big news broke the support and it became resistance. Okay, and down here, I see support. Okay, in this general area, support, back up, support, back up, and support, back up, right around this price level. So if I'm doing a breakout strategy here, if this breaks above 57.11, pending order to buy, okay? Or if you're more patient, you say if it breaks above this wick here, pending order to buy, 57.39. I think I like that better because it's not far off from 57.11 right this second. Okay, you can see it here. Could trigger pretty quick here. So if I want this to not trigger until after the big news comes with the FOMC statement and rate decision, then I probably have my breakout strategy up here. If it breaks above 57.39, buy. If it breaks below this support down here, the lower one, then I would sell. Okay, so price hits 56, say 68 down here, then I'm selling. Price breaks through and hits 57.39, then I'm buying. Okay, and that's about an equal distance from where the current price is, up or down. So it will take some news to break through this high or this low and to trigger the breakout strategy either down or up. And when there's big news with even war potentially being the news, if the movement has enough momentum to break this high up here or this low down here, certainly it might have enough momentum to continue on to a take profit further down or further up. Okay, so I like all three of these instruments. Since it's news out of the US, you can diversify with different instruments, US 500, gold, Euro USD, etc., with the same basic type of strategy. If you're liking the idea of a breakout strategy when there's really big news. Okay. All right, everybody, I think this is a good place to stop. I don't see any questions having popped up. I'll pause for just a moment to see if any last questions before I sign off from the session. Okay, great. I must have been clear, and I see that everyone that was here stayed the whole session, so I must not have been too boring. It must have been interesting enough. So thank you for joining and staying with the session, even if there were no questions. And I wish you successful trading this evening if you're going to take a shot at any of the ideas that we went over. Certainly you can employ other ideas. This isn't the only strategy you could use. It's just an idea for a technical strategy when indeed there might be a lot of momentum in large moves. All right, everybody, thank you for joining and good luck with the trading. Bye for now.